Mark, good to have you back with us. What do you think about this S&P downgrade?
Well, I think it was overdue, and in my book, the S&P basically downgraded a junk bond because it's no longer a AAA. A government bond has a AAA rating when it is willing to pay the interest in a stable currency. But we're not dealing with, in this particular case, the US dollar with a stable currency.
But this is far away from being a junk bond, Mark. We're still at AA+, which is equivalent of a lot of sovereigns around the world. Do you think we should see another downgrade from here?
The rating agencies are looking backwards and not forward. The U.S. fiscal position is a disaster if you include the unfunded liabilities. And some kind of default will occur. Now, there are two ways a government can default. It can default by not paying the interest and restructuring its debt, as happened in Argentina and other countries repeatedly, or it can repay the debt and the interest in a depreciated currency. And all currencies, all paper monies are losing value in terms of their purchasing power. But of course, the US dollar is losing more in its purchasing power than other currencies.
Right, but what about the response from the Treasury Department? You know, Tim Geithner is saying the S&P has displayed a stunning lack of financial knowledge.
Yes. What did you expect from the Treasury Department? They are the ones that are issuing attack the S&P action.
Okay, well, what about the reaction on the markets then? Because we're seeing a heavy sell-off across the Asia-Pacific. It seems like investors are worried.
Yes, correct. But I think the market began a bear market on May 2nd, 2011, when the S&P reached 1370. And since then, we have been in a downtrend. I personally think that the downgrade of U.S. debt is actually moderately positive for equities because it shows investors very clearly there is a risk in holding government debt anywhere in the world arising from two factors. Either interest rates go up and then the value of bonds decline, or you have sovereign downgrades. And when a bond is downgraded, say, from AAA to BBB, the yields go up, of course. And so I think that, and believe me, I'm the most bearish person in the world, but I think for the next 10 years, you'll be better off in equities and in precious metals than in government bonds.
Mark, you know, one Friday before S&P made this move to downgrade U.S. debt, you said we've seen the highs for this year, but after this plummeting in the stock markets, we're going to get a big rally. Do you still believe in a big rally on its way?
Well, a big rally. I don't think that we will make new highs this year. I think the market basically is incredibly oversold at this level, and it is quite likely that we may bottom out today or tomorrow and have a rally. If you're expecting new highs, then the answer is no.
Okay, what about QE3? You say you could smell it. When is it going to come?
Yes, I can smell QE3, QE4, and many more. When it will come...
Can you smell double dip?
Well, there are two conditions that will lead to QE3. Either the economy shows significant weakness, which is a possibility in the second half of this year. That's what the stock market seems to tell you. Or the S&P drops to, say, around 1100 or 1050, and then I think we'll get QE3.
Double dip. When are we going to get double dip? Are we going to get one?
Well, I don't know, and it depends how you interpret economic statistics. I think the economy is hardly recovering. Good, well, such as luxury goods and so forth. But say housing is still very depressed. even it may rebound somewhat, and unemployment is still unacceptably high and probably higher than what the government is publishing in terms of its statistics. So I think the economy is doing badly, but the key is really that you get significant more weakness and further weakness in equities to get QE3.
All right, Mark, what are you doing with your money?
Well, my asset allocation is roughly 20 to 25% equities, and then 20 to 25% real estate here in Asia mostly, and 20 to 25% gold or silver, and then about 20 to 25% corporate bonds.
All right, one more question for you, Mark. We spoke to Mr. Mobius earlier on. He says the days of the U.S. dollar, the U.S. economy being the anchor for the global world is way long gone. Your point of view?
Well, I think if you look back 50 years ago, say at the 1950s, 1960s, obviously the U.S. had more prestige than today, and that was expressed in a currency that at the time was essentially overvalued against other currencies. And the dominance of the US and the Western world economically has gradually been eroding, and we had a huge shift in the balance of economic power from the Western world to emerging economies. So yes, that is correct. And I also think that the US dollar
Continue, go ahead.
has lost its prestige.